Hi, I'm Irina Abrams with Reliance Realty here in Asheville, North Carolina. And today I'm sitting down with John Lydell, our local lender at Guarantee Rate. And the topic of our conversation is how do you go around of getting an investor loan? So please join me. So, John, I'm working with a small group of small investors, nothing huge, but they're trying to get some special products, that would allow them to buy some rental properties. Can you give me some idea what we're looking at?
So sure. I mean, there are your standard conventional Freddie and Fannie investment property guidelines. They're great loans, and you have to be able to qualify for them. So meaning if somebody's a real estate investor, depending on how they're set up, they might be taking healthy write-offs, depreciation, all these different things that show less income on their tax returns, right? So if you're looking at a standard Freddie Fannie investment property, you have to be able to show the income to support your primary mortgage, your second mortgage, your investment mortgage, all these sorts of things. And there's a lot of guidelines on what can be used for qualifying income. Airbnb may or may not be qualifying, long-term, all that stuff. So it can be a little bit more challenging because it does require tax returns and income supporting documentation. There are also brokered product out there. One is called an investor cash flow loan. An investor cash flow loan does not require any tax returns. You do have to put 20% down. You have to be able to prove that you own a primary residence somewhere. Doesn't need to be in the same town, but you have to prove you own a primary residence. And then what happens is we'll do an appraisal to get a value of the home. And then we'll also run what are called rent comps. So the appraiser is going to go out, look at long-term rentals based on square footage, bedrooms, bathrooms, similar neighborhoods, and they're going to come back and say, based on those rent comps, we think this investment property is going to rent for X amount of dollars a month. That's used to offset the mortgage. So they don't have to provide any income documentation.
So let's outline the 3 tips that John just talked about. Number 1, you have to be a homeowner. You have to prove the primary place of residence. Check. Number 2, you have to have a sizable down payment, a minimum of 20%. That's not a brainer. And number 3, that's probably going to be the most important one. The income of your rental property slash income property is probably going to be the most important factor that determines how much money you're going to get from a lender. In other words, my friends, your property has to pay for itself. Now, I hope we were able to answer some of your questions, and if not, please comment below. Please subscribe to our YouTube channel. Until then, we'll see you next time.